welcome to TradePSY's daily market update for 31st March 2026. Markets are closed today for Mahavir Jayanti, but the last trading session was brutal. FY26 ended with a massive crash. Let's break down the 5 biggest stories shaping your money right now. Let's start with the big number. The Sensex crashed 1,635 points on the last trading day of fiscal year 2026, closing at 71,947. The Nifty 50 dropped 488 points to end at 22,331. This was one of the worst fiscal year closing sessions we have ever seen. Bajaj Finance, Shriram Finance, and State Bank of India were the biggest losers. The sell-off was triggered by escalating Middle East tensions that dashed all hopes of de-escalation. Now the reason behind this crash. Brent crude oil has surged a staggering 55% in just the month of March. That is a record monthly gain since Brent's inception in 1988. Oil is now trading above $112 per barrel. The Strait of Hormuz, which carries 20% of the world's oil supply, has been effectively closed since 4th March due to the US-Iran conflict. This is a supply shock that is hitting every oil-importing economy hard, and India imports 85% of its crude. The Indian rupee has crashed to an all-time low of 94.78 against the US dollar. It has fallen 4.37% just this year. The surge in crude oil prices is making India's massive import bill even more expensive. Despite heavy interventions by the Reserve Bank of India, the rupee's slide has been relentless. Sectors like aviation, electronics, and FMCG that depend heavily on imports are now facing severe margin pressure. This is a double whammy for the Indian economy. While stocks are crashing, gold continues its massive rally. 24-carat gold is now trading at 14,869 rupees per gram, which means gold is nearing 1,50,000 rupees for 10 grams. Silver has also surged by 5,000 rupees to 2,50,000 per kilogram. When equities bleed, gold shines. And right now, gold is the only asset class giving investors any comfort. If you had allocated even 10% of your portfolio to gold at the start of FY26, you would be sitting on handsome returns today. Let's zoom out and look at the full FY26 picture. The Sensex fell 4.9% this fiscal year, posting its first negative return in 6 years. The Nifty 50 was down about 3%. India's total market cap shrank from $4.83 trillion to $4.5 trillion. Foreign portfolio investors pulled out a massive 1.76 lakh crore rupees. The only saving grace was domestic institutional investors who pumped in 8.35 lakh crore, with mutual funds contributing over 5 lakh crore. The real estate sector was the biggest loser, with Nifty Realty crashing 21.3%. So what should you do as an investor going into FY27? Number 1. Increase your gold allocation to 10 to 15% as a hedge against geopolitical risk. Number 2. Do not panic sell. Historically, war-driven crashes recover within 6 to 12 months. Number 3. Focus on defensive sectors like FMCG, pharma, and IT services. Number 4. Keep an eye on mega IPOs coming up. Zepto, Reliance Jio, Ovio, and Flipkart are all expected to list this year. And number 5. Keep at least 6 months of expenses as emergency fund. Volatility will persist through the first quarter of FY27. That's your TradePSY's market update for 31st March. FY26 is officially over and FY27 starts tomorrow. If this video helped you understand what's happening in the markets, hit subscribe and the bell icon. Share this with someone who needs to know. Visit courses.tradepsy.com for our trading courses. See you tomorrow with fresh analysis. Happy investing!